Nigel Allsopp. You are Senior Director, Investment Strategy and Research at Greystar. Thank you for joining us on BiTV.
It's a pleasure. Thank you very much for having me on.
The current economic and political uncertainty is causing inflation to rise in Western economies. How do you see this rising inflation affecting the property markets?
So I guess we saw allocations to so-called beds and sheds strategy, so residential and logistics. We saw that rising before COVID. That then accelerated for a number of different reasons. They were not initially owing to inflation. People felt that those two sectors were tacking onto secular trends in e-commerce, in demographics, and so on. And then it's only through the last year or so, as we've seen the economy restart, that people have started allocating even, perhaps an even greater extent to those two sectors, because they've seen inflation take off and they want to get those secular tailwinds. I think why residential is particularly important, and I would say it's because I'm at Greystar. For full disclosure, Greystar is a residential specialist, and we'll get on to it a little bit more later on, is that residential is historically it's proven the best inflation hedge. And I guess not just inflation hedging, we can get into this in more detail later on, but there are two reasons that people invest in real estate, or at least institutional investors invest in real estate. And this is kind of supported by the INREV survey that's done every year. Principally, it's for portfolio diversification. And then secondly, it's for inflation hedging. Industrial and residential both offer some degree of portfolio diversification because they're more exposed to these secular trends and idiosyncratic factors rather than general GDP growth, as might be the case with more traditional commercial real estate. And again, both of them offer some kind of inflation hedging, but we think the research, independent research, suggests that residential's a better inflation hedge.
Okay. You alluded to residential and logistics. Maybe how do you see other property sectors facing this rising inflation, which are better suited, obviously, but also maybe which sectors should investors be careful with in a time of rising inflation?
Sure. So there's been a bunch of research on this stuff. I think the Investment Property Forum in the UK did some interesting research maybe about 10 years ago. And there is a sort of vested interest in showing that property is an inflation hedge. I think for commercial real estate, the jury's out. Historically, industrial has shown to be some kind of inflation hedge. There isn't really that much data in the UK for residential, but what we do know is there is a guy called Eugene Farmer. He did a very famous study on asset allocation in the 1970s, and what he found was, and I'm going to quote from what he said here, he said that only residential real estate is a complete hedge against both expected and unexpected inflation. Now, that was some time ago. Since then, we've done an analysis of real estate rents and real estate returns, so residential rents and residential returns, and you can see there's an extremely high correlation between residential rents and inflation. And that's not very surprising, given that a large part of the inflation basket is actually housing rents, so they are somewhat kind of linked. Moreover, when we've looked at returns, we can see that not only does residential kind of performs in line with the rest of the market during times of normal inflation, as we've seen over the last few years, where it's hovered around 2%. When it goes above 2%, we outperform by 130 basis points. And when it goes over 4%, it generally outperforms by about 190%. 190 basis points, clarify, not 190%. That would be pretty extraordinary. So, what we can see is that historically, it's really kept pace with inflation, both in terms of rents, in terms of returns. What I would say with all of the sectors is that, I think it's time to start considering both rental growth, and returns in real terms. And what that means is that you're going to have to achieve growth over the next year or so, maybe in the order of about 6%, depending on who you listen to. And that's kind of important when you think the growth prospects for any sectors you're allocating to. You really need to hit that kind of level to get any kind of real rental growth.
Okay, and you mentioned earlier that Greystar is specialized on the residential front, and also the operational the operational housing real estate. Why is residential interesting for investors looking to protect their portfolio, but moreover also what type of housing models should investors maybe look to as in the current context?
Right. So I guess the kind of one of the characteristics of housing compared to, say, commercial real estate is that you tend to have many more leases. You might have 200-300, maybe more leases in a single asset. And those leases would be on relatively short terms compared to, say, a commercial lease. They might only be 1 year long. So hypothetically, you could have an asset with 365 tenancies, and you kind of get to renew the rent every day of the month. So the important thing is, like, if inflation is taking off, as a landlord, you need to be able to monetize that. And you can do that with residential, as I say, because you have lots of leases and because they're short dated. The other thing you might want to think about as well is that historically, people have been very concerned about rent regulation, particularly in the Eurozone where there's a lot of indexation. But now, like, that kind of rent regulation, I think, could be somewhat of a mixed blessing, because in most markets it's indexed to CPI. So by going into some form of regulated housing, you have an explicit contractual link to inflation by force of the regulation. And so I think it's time to kind of reconsider regulated housing alongside open market rate as well, where you're going to get stronger growth in the long run. So those are two things I think about. The other thing I'd say that we like a lot is student housing, but for not necessarily for inflation hedging or the things we've discussed, but just because it's just performed so well. It offers so much more yield than many other forms of real estate, and it's really, I think, disproven the doubters all through, like, the last couple of years. There was a lot of talk of education going online. Actually, we saw an increase in international student numbers and domestic student numbers at the same time as we've seen a drop in supply with COVID. So that's another topic of ours, but not necessarily owing to inflation.
Okay. Thank you very much, Nigel, Allsopp, for your time today, for your insight. And thank you all for joining us, and see you soon on BiTV.